record. Okay, so obviously I like to start on my weekly chart, identify this known areas of U10. We know that the market likes to reverse at these known levels of U10. The market basically likes to reverse at the same price point. Okay, so on the weekly chart, I can see that the market has been moving, has been respecting this area here, and so forth. Okay, so I'll go deeper on the lower time frames so that I may see the market in 3D basically. Okay, so on the daily time frame, I will adjust for most charges. Obviously, on the weekly, there's too much noise, unfiltered noise. So as I go down to my lower time frames, adjust for most charges and filter out the noise, basically. Okay, so I can already see that this area I can see that this area here is irrelevant to me. It's basically irrelevant to the current price action. So I will adjust for most charges and basically adjust for the relevant price action so that the price action can serve me well. Okay, so what do we have here? You can see that here on the top, the market gave us a first touch, it gave us a second touch. This makes it probable that the market will give us a third touch here at the top before crashing or before basically going in any direction, in its chosen direction. Remember, we follow the market, we don't need the market. Okay, so I'll go to my lower time frame. I'll go to my lower time frame, go deeper into the market. Okay, so we have established on the bigger time frame, and we're expecting the market to give us a third touch in that area. To give us a third touch in that area there. Okay. So for the sake of simplicity, we can immediately see that from the 3rd of June up until around the 15th of June, the market has been moving bullish in this bullish ascending channel. The market has been going aggressively bullish within this channel. Again, the market has been reversing at on or around the same price point. Okay, so that is for the sake of simplicity. So I will go to the lower time frame. Okay, so I'll go to the basically lower time frame and try to see the market clear. Okay, so on the lower time frame, on the 1 hour time frame, same thing. Okay, no, let me go back and show you something. So on the 4 hour time frame, the market, like I said, it was moving aggressively bullish in this channel, and then we had a counter. What do they call it? counter trend line break, I think. Yeah, I think they like to call it counter trend line break. So basically we had this bullish channel going up, then we got another bullish channel going down. Typical Falcon pattern over here. 1, 2, 3 touch, multi-touch confirmation. The second touch is the corrective touch. I'll quickly show you. Like I've said before, the second touch, it is usually corrective. Yeah. Okay, so we can see we have a first touch here, a first touch at the top, second touch here, correction at the second touch to further confirm that this is indeed the second touch. So you have second touch at the top, third touch, you want to trade the third touch, you want to buy or sell at the third touch. Boom, as soon as you buy, your target is this. Look, it did indeed reach this target in 1 week. In 1 week, it reached this target. If you bought here, this is a lot of money. This is a lot of fun. So this 1, 2, 3 touch confirmation is very powerful. Okay. So the market at a third touch here, it changed direction, also in the form of a is it counter trend line? I don't feel comfortable saying counter trend line, but whatever. I think counter trend line. Counter trend line break. I'm not sure of the terminology here, but I think, in fact, it doesn't matter what it's called as long as you know how to use it. I do know how to use and apply the terminology. Okay, so we're moving in this channel, counter trend line break, got a bearish channel, counter trend line break, bullish channel. What a week. Like I said, this has been a very nice trading week. This has been a very nice trading week. Okay, so in the current market, I'll adjust for more touches. Basically, adjust for the relevant price. Yeah. In the current market, you can see that we have the market has been moving in this structure. So the market has been moving impulsively and correctively. So you can see impulsive move, correction. You're gonna trade the third touch, first touch here, second touch, third touch, buy at the third touch, we break, retest, impulsive move, correction during Asian session. That way they look so ugly. And an impulsive move, whatever this is. I think that's probably at 3:30. Yeah. So this was at 3:30. The market is very volatile at this time. So we can see that's why we have. No, this was S6. I remember I was even in this trade when the market did this, but I was confident that we we're going up, so I didn't close my trades. I think I'd enter around here. And after 3, we have 3 touch, third touch here, second touch, enter the third touch. The market made a push to the upside. I don't know what happened here. It rejected, it gave us a strong push to the downside on a smaller time frames. But I was confident that the market was going up, so I didn't close my trades. I held, and then the market changed direction. So at around 9 o'clock, I closed all my trades. And then obviously the market gave us an impulsive move, correction. Again, 3:30, very volatile. It gave us this rejection candle to give us a third touch. So your first touch here, second touch, I'll see this at my third touch. So to give us a fourth touch here before making a push to the upside. Hence, I will come to this now. Hence, I believe that since the market has been reversing at this um, trend line, I'm expecting the market to come back down here, give us another fifth touch before making a push to the upside to come test this area, to come give us an overall third touch on the weekly time frame. Okay. Excuse me. So I'm expecting the market to come give us basically maybe give us this touch, maybe probably during the Tokyo and Sydney session when we are sleeping at night. And then when the market opens, London session opens, I'm expecting the market to give us a push to the upside to test this trend line up there. Like I said, you have to use proper risk management, but try to make your stop loss to be as wide as possible. To be as wide as possible to increase your chances of winning, basically. Because if you like Nasdaq, you can't trade Nasdaq and just hit it with tight stop losses. You can't. You have to be a robot. You need those sniper entries if you're gonna trade Nasdaq and just hit with tight stop losses. Because the market can, like here, you can enter a buy here and then this thing happens. So if your stop loss is tight, it's easily gonna touch you. It's easily gonna take you out, basically. So I don't think I need to go to the 15-minute time frame because the market looks clear and simple, even on the 1 hour. Even on the 1 hour. Okay, so yeah, so I think that's it for Nasdaq. Yeah, that's it for Nasdaq. Oh yeah, obviously in this area, on the 1 hour, in this area, I would look for confirmation, some sort of confirmation to further stack the odds in your favor. You can't just get a touch and then enter your buys. Because the probable says it is probable that the market will give us a third touch here, but it's also possible that the market could basically come here, play around. I forgot what it's called, what they call this playing around here in the Falcon strategy. Play around, then break out to test this lows here. That could happen. That's the possible. But the probable is third touch and then push to the upside. Yeah. Okay, so I'll quickly stop